If you spend 2,000 and you pay back 1,500, if you're owing 500, the bank will still calculate interest on the entire 2,000, not on the 500 that you owe. They will calculate your interest on the entire 2,000, not the 500 that you owe.
Hi everyone, welcome back to our channel. Hope you're all doing well. So today we're going to be talking about the credit card system in Canada. I recall that when we first relocated, it was one of those areas that took me a bit of a while to understand. And that's because, and that's probably because back home, Nigeria, where we relocated from, it was not a very heavy credit card system. Yeah. So over here, getting to know that credit card was so important to have. For me, it was like, why do I need to have it? Why can't I just pay as I go, so to speak, and pay for what I can afford in cost?
Only spend what you earn.
Exactly. And like I said, it took me a while to understand, and we're not in any way
financial experts.
Exactly.
No.
But sometimes I feel like even hearing it from a lay person really helps. And I know that you, as well as my sister, really took time to break it down. A plus A.
No, I absolutely agree. I think sometimes you can hear the expert opinion, but it helps, at least for us, it kind of helps hearing from the opinion of people who have experienced it. Who may not necessarily be experts at it, but just kind of understood the system. I think we've now gotten to that place where we can speak from a perspective of semi-experts, if I use that way.
Not you.
Understanding the system.
I think you have a better grasp.
And it's funny because I know earlier I said you spend what you earn, and that was kind of the society back home in Nigeria. But still, I'll say this: even within this credit society, please only spend what you earn.
Or even less than what you earn.
Less than what you earn, yes, exactly. Don't spend above what you earn. I saw a quote somewhere that said the fact that you can afford it, or the fact that you can pay for it, does not mean you can afford it. And you should always be very clear on those two things. Sometimes we buy very bulk items that, quite honestly, we can pay for it in bits, but we can't afford it if you look at the bigger picture. When the amount of what you're paying for is a bigger proportion of your salary. And because they ask you to pay in bits, you feel like, okay, that's fine, but can you really afford it? So that's besides the point. We are here to talk about the credit system in Canada. And this is primarily for new immigrants. So those that have been in society for a much longer time, you probably would not find this.
You'll be surprised. Like sometimes just hearing somebody spin it another way also helps.
Well, let's see. I think for me as well, the reason why credit cards are very important, and this is my personal opinion, is because of your credit rating. Your credit rating is, when you go do your annual fiscal or your total body check on your health, that is what your credit rating is to your financial well-being. So any bank or any institution that wants to offer you financial loan, one thing they lean on is what is your credit rating. It's the sum total of everything, of your behavior, financial wise.
Okay, so you said if any financial institution wants to give me a loan. So does that mean that if I'm not interested in getting a loan ever, I shouldn't be bothered about my credit cards? Do employers check it?
No, your employers don't care about your credit system. But beyond loans, it's just a good thing to have, because even things as little as your phone company, for instance, it's important for them to also know that you can pay up your bills. So it may not necessarily be you taking up a loan or things like that, but it's just important. Your landlord, for instance, if you're going to rent a house, whoever you're renting a house to wants to know what's your credit behavior, how well are you, how deep are you in debt, and so they will ask for your rating. So it's not necessarily because you want to take a loan, no. But generally, I think it's just a good thing for you to be on top of your credit score and your credit behavior.
So, are there specific people that do these checks? How does it connect to the banks? Is it just the banks doing the check?
No, so there are different bodies that do the reporting. And there are two credit facilities mainly in Canada. There's TransUnion and there's Equifax. These are the two big credit bureaus. So what happens is this: when you get a credit card, whether you get a credit card from your bank, you get it from Walmart, you get it from PC Financial, or any of those other people that give out credit cards out there, periodically they sign up to send your credit report, your credit balance, to either TransUnion or Equifax. So for you, for instance, now we use TD Bank. TD Bank probably
Free
submits.
advice.
Yeah. They probably submit your credit report, your credit statement, so to say, to Equifax at a certain time of the month, every single month.
Okay.
So when you pull your report, they will tell Equifax that at this time of the month, this is the 5th of July, you are owing 7,000, your credit limit is 20,000.
Before you go on, in fact, there are so many things I want to ask.
Yes.
That's everything that you said. Number one is talk about having credit cards from different institutions.
Yes.
For me, it always feels like a lot. I'm like, let me just focus. I already have a hard time, sticking to, like, trying to remember, I have to pay off within a certain date, and we'll talk about that in a bit.
Yeah.
So is there any advantage in having like multiple credit cards? I, for one, I mostly always just stick to that TD, like bank credit card.
Yeah.
So is there any advantage in having multiple cards from different sources?
Yeah. The answer is yes and no. And it depends on your personality and your spending behavior. And I'll use this as an example. So Funke has only one credit card. I have at least 6. I have at least 6. Now, the difference in that is when you see her balance per month, she's able to keep it, that one credit card, keep it very low. But for me, because there are other things tied to my credit card, I need a bigger base from a credit limit standpoint. Yeah? So for instance, if I had just one credit card and my limit on that credit card was say 30,000, if I spent 20,000 a month on that credit card, that is 67% of usage on that credit card. Already my credit score for that month will be impacted. However, if I spend that $20,000 a month and I had 6 credit cards and 6 of them had 30,000 each, I can't do the math off the top of my head, but what would happen is, because I have a larger credit base, the percentage of my spend will be much lower. So if you're someone, for instance, that you can comfortably live on $1,000 spend a month on your card, if you had a credit card of 5,000 limits, you're fine. You don't need more. Quite honestly, you don't need more. You're good. But if you're someone that you're not being frivolous in your spending, but genuinely your spending per month needs to hit at least 10,000 a month. If you had a credit limit of 30,000, you're already spending 1/3 of your credit limit. That's 33%. Now, the golden rule is that in a month you should not spend more than 30% of your credit limit. So based on your credit limit, based on your spend, you should be able to gauge yourself and say, do I need more? For instance, I have so many people not throwing credit cards at me, but people asking for that I should come apply for credit card, and I don't want to, because I feel what I have, the credit limit I have, is more than sufficient. On an average, I probably do not hit more than 9% every month, and that's good. But that's because I have a sufficient base of credit limit, so I'm able to manage it from that perspective. But if you have one and you are spending way more, I think when we first came, the first credit card we had, our limit was 1.5.
Yeah, that's they start you small.
Yes, to try you out.
Yeah, and I'll just come to that as well, because I remember that after like a bit of time, of course the banks will now offer like, oh, do you want to increase your credit limit? So the question to me, to answer to someone out there, should I take that offer? If they come to me, approach me to say, oh, increase your credit limit, should I do that?
100%. This is my opinion. 100% take it. There's never been a time the bank asked me that question that I didn't take it. However,
let me let you finish it.
No. However, I made sure that my credit limit never impacted my credit spending. The fact that I have the money does not mean I spend it.
But that's the thing, for some people, well, I guess it goes back to being true to yourself. I know that there's some people out there, once you see that money, it's just be doing you spend.
But you should know it's not your money.
Okay.
And I think that's one thing to clarify, guys. Your credit limit is not your money. It's the money that the bank is saying that we are willing to lend you this money. Because what then happens, and let me state this, is if your credit limit is 10,000, for instance, and you spend 2,000 from that credit, you're expected to pay back. And so let me just go back to how it works. You have a monthly period. Probably say your cycle starts in the 1st of the month. Let me, for ease of calculation, it starts from the 1st of the month and ends on the 30th of the month, for instance, for a 30-day month. Okay, you're allowed to spend anything between that month. By the 30th, your credit cycle ends. Your report is generated the 1st of the next month. you see on the statement of your account that you spent 2,000 for this month. Yep. The expectation in that is that 21 days after that, so 21st of the next month, you're expected to pay off that 2,000 you spent the previous month. Okay? So the 21st day, you expect to pay back the balance on the previous month.
Is it 21 days for
all credit cards? It's a grace period all credit cards give. So that's the grace period you expected to pay. Every credit card does it. Yep. If you spent 2,000 and you pay back 1,500, if you're owing 500, the bank will still calculate interest on the entire 2,000, not on the 500 that you owe. They will calculate your interest on the entire 2,000, not the 500 that you owe. So sometimes you see banks, when they give you your statement, they say minimum payment $10. Minimum payment $10 means that if you pay us $10, we won't send collectibles after you. We still know that you are servicing your debt, but you will pay the fine and the interest, sorry, not the fine, the interest on the entire amount you owe. And that's interest usually for most banks about 21.99 right now.
So is that every month or every
month?
cycle?
Yes. As long as you continue to carry over that debt, they charge you 21.99.
Well,
and
is it not confusing then to some people?
Yeah.
Like once I see minimum statements or minimum, what do you call it now?
Yeah, payment.
Minimum
payment,
like,
yeah.
Shouldn't that be like
no, but sorry, when you're not the criminal. You're owing 2,000, you see minimum payment $10. Do you really think the bank only wants $10 out of their money? The $10 you're paying is just an indication to the bank that you are still servicing.
You still remember?
Yes, you still remember that you're owing, yeah, and you're still paying that amount of money.
Okay, so what should we be checking then? So to know how much to pay every cycle, where is the best place to check? So
once your account statement ends, you see your statement balance. That amount is the amount you have to pay off. Okay? That amount is the amount you have to pay off. However, there are times when, for instance, you've made a payment to, maybe you bought something from Bottom B. Let me use Bottom B as an example. Yeah? And your cycle is supposed to end on the 21st. And you made a return. That return came in on the 20th. Okay? But the amount didn't hit your account until your cycle closed. If out of 2,000, what you made a return of was 500, and that 500 comes in the next month, you can easily take that off what you're supposed to pay. Okay, because that money has been returned, even though it doesn't reflect on your balance, but technically 500 has been paid back into that balance. So what you owe technically is 1,500 to pay back, because there's been a return on your account. So there are situations like that where you have to, and that's why the other thing to mention as well is it's very important. Do not make assumptions that the banks have integrity by and large, but always go through your credit statements. This is an advice to someone out there. Once you get your credit statement, take the time, look line by line. You may not remember everything, but something will jump out at you if it's not your payments. So always take your time, go through your credit statements to be sure that you're being charged. There are times I've gone through my statements and I've had to go back to the bank and say, hey, I think there's an error here. Let's correct this. And yes, they're always willing to correct it. Yeah?
I'm just thinking now, like, I don't remember how many times I've gone to check my own error.
Yeah, and there are times where, again, for those, if you're still trying to get used to it, and I'll put Funke on the spot here. There are times where she doesn't even know when her cycle ends. Sorry, her credit cycle ends.
Period cycle.
No. She doesn't know when her credit cycle starts and ends.
So tell me how, remind me how, I know how you helped me in that.
Yes. No, but the point I'm even trying to make here is, I remember we went through her credit statements together. I'm like, babe, why do you have an interest of $200 charged here? And she had no idea she was even charged $200 of credit. I'm like, no, you know what? This was an error. You didn't realize that your credit is. Go back, call the bank and tell them, because they can see your history, they know that this is not something you do. And they can even look at your checking account and know that at the time you were owing this money, you had more than enough to pay for it in your checking account.
I think the mistake I used to make then, and that's why I was talking about what you finally did to help me, was that at some point I just remember, I just send money, bam.
Yes.
As in, not even caring about the time of the month, or I was just, as I remember,
not even caring the amount.
I was just over.
Yes. Yes.
And then Frank had to sit me down like, come, let me break this thing down to you. And then what finally helped me was that I had to set an alarm, tying it to my
to notify you.
My financial.
Yeah.
I'm struggling to say cycle. But
Your credit cycle. Yeah.
My credit cycle to notify me that this is the day that I need to make a payment to make it make sense. Right?
Yes. Yeah. And if you don't remember, for instance, I know my own dates. So, but if you don't remember, set an alarm and try to make that alarm happen 2 to 3 days ahead of when the cutoff is, because again the months fluctuate. There are 30 days month, there are 31 days. If you enter February, it's a different conversation. So put 2 to 3 days buffer just in case. Now to the point, one of the points you made earlier, do not overpay your credit card. There's no value in it. If you're owing 1,000, pay 1,000. Don't pay 1,500 and say, you know what, I won't have to bother about next month. No, there's no value in it. You know, I still forget doing that the funeral and I'm like, babe, are you even paying attention to some of these things? But no, she's not. She just wants to get it off her head, you know. And it's interesting because the way the credit system works, you have to be very on top of it. And you have to understand that every transaction you do has a potential impact of affecting your credit rating. Yeah, it has a potential impact of affecting your credit rating. And the biggest impact, in my opinion, again, maybe because for some of you that know, I'm a licensed mortgage broker. And so everything within the real estate space matters. Yeah. For me, the biggest opinion or the biggest impact is on housing. Yeah. I'll say this out there to new immigrants particularly, and those from my part of the world. The earliest you can buy a house in Canada, the better for you. I know it's not easy. Don't get me wrong. I'm not simplifying it. But the earliest you can buy a house, if you think by some stretch with integrity you can buy a house, please do it. And I say it carefully because I know the industry is quite messy. But if you believe that you can do it, you can make some inconveniencing moves and buy a house, please buy it. Okay? Your credit ratings are very important. We're in conversations with the bank concerning some mortgage facilities and all of that. Yeah. And one of the things that the bank said was that they have a new program where if you have a credit rating of 820 and above, they will slash your qualification rate by 50%.
Qualification
for mortgage.
Okay.
For mortgage, yeah.
Regardless of the number of.
Yes, regardless of the amount you're willing to borrow or anything. But what that means is that it makes you twice as easily qualified as the next person. If that's English sounds right? It makes you a lot more easily to qualify than the next person. Okay, and that's to show you how important your credit rating is. Yeah. And so for us, it was such a good thing, such a good deal that due to no extra effort of yours, just due to being diligent with your credit rating over the years and your credit behavior over the years, that you borrow money, you pay back as and when due. You know, if you have a car loan, you pay back. And by the way, there are different types of credit. So there's like your revolving credits, yeah? Revolving credits are credit like your phone bills. They come every time. You have to, you know, keep paying it off. When you print your credit report, a couple of things affect your credit score. And just to say this before I go back to the housing, inquiries affect your credit score. What inquiries are is for every time you call and say, hey, I want a credit, or I want to take credit. Even when you want to buy a line, most times they do a hard check. You must have heard this, hard check. So always ask, are you going to do a hard check or a soft check on my credit? If the soft check is fine, it has no impact on your credit. But if the hard check is going to have an impact, so ask yourself, do I really want to take this credit? Okay. If you have a credit to a bank already and you go and ask them to top up your limit and they have to do a check, it's going to impact. It's counted as an inquiry. Yeah,
so it's better for the bank to approach you.
Yes.
To give you an increase 100%. Limit than the other way around.
Yes. Yeah. So the question you should be asking the bank is, am I pre-approved for a credit limit increase? They'll check your record and say, yes, you are, or no, you are not, and then you leave it. But by all means, if you need to expand and there are times that I've had to go, I've known that they'll do a hard check and I still took the credit. There are times like that, yeah? Which is how I got to 6 credits, at least 6 credit cards in the first place. And I was okay with that. I was okay with the impact. At some point, you take those impacts. So maybe you might take a hit of 12 to 20 points going off your credit score. But that's fine.
So what's a good credit rating? Like what?
Yeah.
What score is?
So overall, your credit score goes up as high as 900. Okay. Yeah. Anywhere from 750 is my own advice. Anywhere from 750, be within that range. 700, 750. If you get
so 700 upwards.
Upwards. Oh yes. Okay. 700 towards 750. Some people go 650. Again, it's a terrible. It's not a terrible score because these scores there's bad, there's fair, there's good, there's excellent. You want to, as much as possible, be within that excellence range. Once you cross, I believe, 800, you're already within that excellence range. And you want to keep your score there because what then happens is banks and financial institutions are pretty much begging for you to take more credit. Again, I don't advise that you take credit if you don't need it, because even if they approach you to take it, they still probably will do a hard check on you. So do not take what you do not need. But get to a comfortable place where credit does not become a hindrance to you, and it's important that you know that. Yeah. And
I didn't know this before, but recently I found out that you could actually check your credit rating on your bank app.
Yes. Yeah. Not all banks offer it, but some banks are still offering it. Yes. But if you do not have it, and there are different apps, and I don't want to do free advice for anyone. There are different apps where you can go check it. But for the sake of anyone listening out there's an app like Borrowwell. You can go there on every week. They send you an update on your credit. It's good that you check it and go through the items, because they will tell you, for instance, how many inquiries have happened in your account. The longer an inquiry stays, the better for you. The longer you hold a credit card, this is one thing to also mention. If you do not need a credit card, you don't have to close it. Just keep it. Don't spend it.
Sorry, can you explain that?
So if, for instance, you've taken a credit card from a company and you don't necessarily need to use it, don't go and say to them, hey, I'm no longer using this credit card, can you close this account? Don't close it, just keep it there. It doesn't hurt you. Yeah, it doesn't hurt you, just keep it. Because once you
use it.
Yes, because the average length of time that you keep a credit card impacts your credit score as well. Yeah, so they check the average length of time that you've used your credit card, and that impacts your credit score. So it's important that you do not close unless you have to. I've had at least 2 credit cards closed. One of them was because the financial institution itself stopped using a bank, so they closed that credit and they wanted me to come and apply for a new one. I'm like, you know what, I'm not going to bother. So unless that happens and it's out of your control, don't close it, just keep it. I have many credit cards that have 0 balance. Anytime they print my statement, what they say to me is, each time I check my credit score, one of the things they say is the financial institution might take back the credit card because you're not using them. I'm like, that's fine, but that's never going to happen. Yeah. And if you want, once in a while, you spend $10 on it, $20 on it, pay it back just to keep it active and all of that.
As long as you remember to pay it back.
Yes, always remember. Because the problem with spreading yourself across too many credit cards is you might not remember what you spent on each one. And because each one has different cycle, you just might not remember what you're spending. So it's good to always be on top of it.
And just to add that, there's also a system whereby you can set with your bank the time when you want them to take out your credit, right? That might also help.
100%. Yes. The only reason why I've never done that is I want to see my credit report. I want to review my credit report. Because if you're the one that sends me my bill and you're the one that collects your money, how do I know that you're charging me the right thing? I want to be able to look at
issues.
Yes, I agree. I agree, I have trust issues. But I want to look at my credits, every spend, and know that I'm really paying for what I spent, and then I pay the money. Otherwise, you just sit back and the bank will charge you interest, and they'll take their money and it keeps going like that. So you don't want to. Personally, I didn't want. It's a convenience that you should consider.
So when the bank will charge you interest, like if they are deducting?
No, they won't charge you interest. That is deducting. I'm just saying if there's an error, for instance, that they charge you an interest. You will never be able to pick some flaws and lapses here and there. But you want to be able to check your credit score. Take the time. A lot of us are on our phone doing different things. One of those times in your phone browsing, go to your credit statement. Just read that. What have I spent? Where is this money going? The other thing it helps you to do is also cut down on your spending. You might want to go through your credit spend, and if you have an app, most banks have this. So the bank we use, it can tell you what you're spending on every category, on feeding, on transport, on housing, on utilities.
Spending over. You are spending more than usual.
So it helps. It helps because you can then look back and say, okay, I've spent 2,000 on dining. Did I really need to spend that much? And then you can cut back, or you can say, no, you know what? This month was an exceptional month for whatever reason I spent it. But it helps you stay on top of it overall. Yeah. Then I was talking about housing, and I just want to go back to that quickly in terms of housing. Buying a house for most of us is going to be the biggest purchase you ever make in your life. Yeah. And so it's very essential that your credit score is good at the point you're buying a house. It can impact 2 things. One, it can impact your qualifying rate. In fact, probably 3 things. Your qualifying rate. Secondly, it can impact the amount of money lenders are willing to extend to you. Then thirdly, it can also impact the rates that they extend to you. So if your credit score is terrible, in fact, some A lenders will not even touch your file. Just because of your credit score, they will not even touch your file. They'll say, I'm sorry, we cannot lend money to you, go to somewhere else. And then you have to go to private lenders or to B lenders and all of that. And then what happens as you go down the ladder of those lenders, again, not to say B lenders are bad, they're not, by the way. But as you go down away from A lenders, your interest rate goes up. The interest that because they know they're taking a lot more risk on you, and so they want to charge you more interest to compensate for that risk. So you want to be careful, with your credit score. It's extremely important. And I say this because for those of us that don't come from a necessarily well-established, I know credit card systems are now available in Nigeria, but for those of us that come from a system that is not very well-established credit-wise, it's easy for us to get things wrong, not because we are careless, but because we just do not know. And so that knowledge of knowing how to manage your credit card, extremely important. It's a history that stays with you, and it's history that you want to build over time. Once you hit that good place credit-wise, make sure you stay with it. And if you ever see anything wrong with your credit score, so maybe there's an inquiry that was made on your account and you can see that you weren't the one that made that inquiry, please reach out to the credit bureau, whether it's Equifax or TransUnion, and complain so they can delete that whatever from your account, because every score matters, with your credit bureau.
So many nuggets. So final question for me. How soon do you think we need to start talking to our kids about like credit system and just credit cards and just spending habits and whatnot?
At least my own plan is as soon as they become teenagers.
Teenagers,
yes.
That's,
oh no. As soon as they become teenagers.
I feel like that's like it's too far.
No. Well, again, maybe. So when I say teenagers, I mean like
the real big discussion. Because even now, from time to time,
no. So right now,
it could be very interested in money, looking at bills, trying to.
No, you're absolutely right. Kobe is the person that every time we spend, he makes sure he collects the receipts. And he will go through everything and ask you, a bag of grapes for $7? Isn't that expensive?
Please tell me where the apple on the tree.
So he queries every spend, which is good. I like it. But I think there are two things. There's the money education, which we started with them a long time. At least they've been on that and they've had their own personal savings. And I mean literal them saving money for themselves for quite piggy bank, for quite a while now. And so we try to teach them the money consciousness and the money behavior and just having healthy money habits. If you want to spend something, is it really worth what you want to spend on, or do you want to keep to spend on something else? But when you now transition into credit cards, now for so you want them to understand, and for us, one of the things we'll do is we'll first introduce them with our own credit cards. Let them see how it works before they get to handle their own, so that they have the mentality and the consciousness. They've already trained. It's almost like you want them to learn. Again, I don't know if that works here, but back home, before you buy a car, you probably use your dad's car for a while. That's already semi-rickety, so that if you destroy that one, you make all the mistakes before you buy yours, So let them make all the mistakes and learn, and you are there observing them because you see how their behaviors, and you're like, you don't spend on this, you don't do this, your card is due, how come you didn't pay it? All of that. You can give them one of your credit cards that you're not using, let them be theirs, and let them to watch their behavior before they begin to handle their own. But it's important that at a very early age, they understand how that credit system is, and the earliest they can start to handle a credit card, let them start handling it and building their own history as well.
I get it. So that answers the question. When you first said teenage, I was like, what? But when you're talking about on that level, they definitely need to be more mature. Okay.
Anyway, there are so many things too, and I don't think we can fully unpack everything, quite honestly. But your credit
has been very helpful. I
think
if I can say so myself.
But your credit rating is extremely important. A lot of it is tied to your credit card. A lot of it is tied to your bills, the inquiries that you make, the line of credit that you take. Just also to mention this, and not everybody necessarily will be in that space of line of credit. But if you must take money from anywhere, whether it is line of credit or credit card, always consider line of credit first. The reason being that most times,
starting another conversation. I think we should come back to talk about that. Talk about the difference. Another thing that I would like us to talk about as well that can help somebody out there is like saving for kids. The RESP. So that might be something that we'll sit down and talk about.
Absolutely.
People don't know anything about that.
That should be a separate video. We should talk about RESP very soon.
Okay, so line of credit, RESP. But let us know if you've enjoyed watching this video. Let us know if you have any specific questions.
No, I just want to add again that we're not financial experts.
Please.
We're not. Please.
Just talking from our experience and as laymen, like I said earlier, sometimes it helps to hear this from people that are also in the system like you. And if you have any questions, if you have any contributions, please feel free to drop them in the comments. And until the next one is thanks for watching and see you later.
Bye.